Okay. So first of all, as we have already discussed, can you tell me why we record transaction?
Why we record transaction? Okay. For remembrance and for easy understanding. Okay, for easy understanding and to know the
outcome, result, or financial position.
Yes, sir.
Yes. So recording is done in journal entry. Okay. So first time we record all the transaction in a book called journal entry. That's why it is called books of original entry. Okay.
Okay.
Okay. Now, whenever we go to a shop and we purchase something, then they record that transaction in their book. So everybody is doing in their own manner. So it is not possible to understand each other book. Okay. And due to that, we follow a common procedure, common method to record the journal entry. Okay. So for that, to record in a common way, we need a systematic rule to record journal entry. Yes?
Yes, sir.
Okay. So for that, we understand the concept of accounts. So for recording journal entry, actually every transaction has some account involved in this. Okay. So we classify these accounts in three parts. So first of all, what does journal means? So journal means daily recording of transaction. Daily recording of transaction. If we talk about definition, then journal means, you can see here, journal means a record in which transactions are recorded in a chronological order. Means we record transaction as they happens. Okay, so when we record first transaction, after that any transaction happens, then we record that transaction. So we don't mix the transaction like the third transaction will be recorded first and first transaction will be recorded thereafter. We don't do that. Okay, whenever a transaction happens, we record that transaction first and after another transaction. So that is chronological order. So whenever transaction happen, we record in a continuous manner. Okay, so journal means a record in which transactions are recorded in chronological order. The business transactions are recorded here first. Therefore, it is called books of original entry. So this is your definition of journal. You can also add a line that we record transaction on a daily basis. Okay, but in small business, we can include that line in definition. But if you have seen it in small businesses, we record transaction on weekly basis because there is not many transactions. So what we do, we accumulate the transactions, we accumulate the vouchers, and then record all those vouchers at a single day at the end of the week. Okay, so we record weekly in small businesses also. So we record transaction on a daily basis in journal. Is that clear?
Yes, sir.
Okay. Now there is three types of account that we study for our journal entry to understand, to pass the journal entry. Okay. So first is a real account, personal account, nominal account. Actually, sometimes you can say that account can be classified in two types, personal and impersonal. And again, impersonal is divided into two categories, a real account, nominal account. Okay, so you can also say that. But here, types of account, there is three types of account, real, personal, nominal. Now, what are these accounts mean? in journal. Okay. So first is the real account. Any physical assets or things which are used in business is included in a real account. Means whatever your business is, there are some items that you have to use. There are some machines, building, land, or any other items, things, or assets which you use in your business to operate it. Okay, so all those items are real account. Is that clear?
Yes, sir.
Yes, because let's say I run a coaching institute. Let's assume I run a coaching institute. So I have furniture, yes, to sit students, and I have chair, I have fan, bulb, building, land. These all are real account. These items are used in my business. Yes.
Yes, sir.
Okay. So if I say to you, if you go to a furniture shop, which shop? Furniture shop. Then can you tell me the 5 assets, sorry, not assets, 5 real accounts in that?
That shop. Okay. Assets.
No, real account. 5 items that can be said a real account.
Cash.
Cash, very good.
Furnitures.
Furniture.
Sir, you know, right? I can see the PDF.
Actually, here it is written. You are reading this?
Yes, sir.
Okay. Sorry, my mistake. Now, actually, you have remembered. Okay, no problem. Okay, tell me 5 items.
Cash. Furnitures. Machinery.
Okay.
Class.
And
the building.
2 more.
One more, right?
There is only 3: cash, furniture, and machine.
Goods.
Goods. Okay, goods. Which goods?
The furniture goods.
Yes, so furniture is included in stock actually.
Okay. There is 2 more.
Yes.
Machinery. I thought machinery.
Electrical equipments can be included. Yes.
Nothing, sir.
Electrical equipments like bulb, fan.
Oh, okay.
Yes, these are also assets.
I see. Okay.
And the land at which our business operates.
The building.
It is also an asset.
Yes, sir.
So these are real accounts for our business. So in the same manner, you can see, you can assume the assets of different business organization and real account. That will be our real account. Okay.
Okay.
So any item which we can transfer, we can receive or give. Okay. So that is a real account for the business.
Okay.
The second thing is personal account. Now, what is personal account? So personal account means all the names that is mentioned in our business. Okay, so in any transaction, if there is a name mentioned, then it is personal account. Now, it can be a name of person, or it can be name of any organization, or some words which will be used instead of names. Okay, so there are 3 types of personal account. First is natural, where we use name of any person. Okay, there is a second is artificial, where we use name of any organization, and the third is representative account, means where we use any other word instead of names, means where we cannot use names, then we use these words. So these are called representative account. Is that clear?
Yes, sir.
Okay, so you can see here in personal account, I have written name of any person or any institution is included in personal account. For example, Ram, Mohan, Sohan, Tata, SBI, Reliance, Capital. Reliance, after Reliance, there is a word capital. Yes, you can see.
Yes, sir.
Yes. So capital means we cannot use the name of owner in our business. Yes or no? I told you about this.
Yes, sir. Yes.
Yes. So if we cannot use the name of the owner, then whenever we transact with owner, then we use capital or drawing. Okay. So these words are used instead of owner's name. That's why these are called representative account. Okay. It represents the person.
Okay.
Okay. There is outstanding expenses, prepaid expenses. So in name, you can include any name like my name, your name. You can include any name. Okay. All the names are personal account.
Okay.
Okay. So this is our personal account. The third one is nominal account. Nominal account means all expenses and losses, income and gains of businesses included in nominal account. Means if there is some expenses that we have done, like we have paid wages, we have paid salary, we have paid rent, electricity expenses. These expenses are nominal account. When we receive some income like sales, rent received, discount received, commission received. So these type of items are income for the business. Okay. There can be some profit or loss also. Like when we sell our assets, we can sell it on a higher price than our book value. In that case, there is a profit. And in some of other cases, let's say we sell our assets at lower price than the book value, then it is loss for us. So these type of items like income, expenses, profit or loss is nominal account for us. Actually, there is no actual existence of these items. We put a name, we put a label on a real account, and then it is called nominal account. Okay. Like when we are paying rent to someone, okay, we are not giving rent, actually we are giving cash to him. Yes.
Yes.
Yes, but we are saying that we are giving rent. Yes or no?
Yes.
So these types of transaction where we put a name on a real account, and it is called nominal.
Oh, okay, sir.
Okay, so now you have to remember these, because a real account, personal account, nominal account, and then we will discuss the rules of debit credit. Okay, so if we understand these things clearly, then it will be very easy for you to understand the whole journal concept. Okay, the whole journal concept is based on these three accounts and the rules. Okay.
Okay.
Now, if you have studied journal entry, do you remember the rules of debit credit?
Now, actually, that is the only thing that I don't remember.
What?
I don't remember that.
Okay, you don't remember that. Okay, no problem. So rules of debit credit, it is also called golden three rules. Okay. Golden three rules. So you can see for real account, it is debit what comes in, credit what goes out. For personal account, debit the receiver, credit the giver. And for nominal account, debit all expenses and losses, credit all income and gains. Can you repeat these?
Debate.
Yes, you have to read.
Debit what comes in and credit what comes out.
A little loud. I'm not able to hear you.
I'm supposed to read all this.
Yes.
Okay. Real account. Debit what comes in and credit what goes out. Personal account. Debit the receiver, credit the giver. And nominal account. Debit all expenses and losses. Credit all income and gains.
So what is the meaning of first one? What do you understand by debit? What comes in, credit what goes out?
The money which comes in, debit is the money which comes in, credit is what which goes out.
Money.
The money which goes out.
Okay, so we will discuss only money in this room. Debit what comes in. So if money comes in, it will be debited, and if money goes out, it will be credited.
In real account, yes.
And what if we are giving furniture to someone?
Okay. Furniture to someone. It is selling.
Yes, we are selling furniture.
Yes, we are selling furniture. So cash comes to us.
Cash account.
No, cash comes to us.
Okay.
Am I supposed to say the transaction?
No, you are saying that if money comes in, we will debit it. If money goes out, it will be credited. So I'm saying if furniture goes out, okay, furniture is a real account. Yes or no?
Yes. Oh, money comes in.
Money comes in. Yes. So money comes in and furniture goes out. Yes.
Yes, sir.
So debit, we will debit the money, cash, and we will credit the furniture. Okay. Actually, in a real account, we are talking about all the real accounts of business, not only cash. If we are doing transaction in furniture, if we are doing transaction in land, building, machine, so every item is a real account for us, and we have to uh, apply these rules of a real account, that is debit what comes in, credit what goes out on those items. Okay.
Okay.
Okay. So in business, whenever you do a transaction, some item comes in and some item goes out. Simple. Yes.
Yes, sir.
You go to shop, you purchase something, and you pay money for it. Okay. So if you purchase, let's say, you purchased hair oil. Okay.
I purchased
Hair oil.
arrow.
Yes.
Arrow.
No, wait, let me write it. You can see this.
Yes, sir.
Or let's say you purchase a beauty product. Let's leave the hair oil. Okay. Okay. So if you purchase, then what you are receiving here?
I'm receiving an air oil.
Okay. And what you are giving?
Money.
Money. So by this rule, debit what comes in means whatever you are receiving will be debited. Okay. And whatever you are giving will be credited. So you are receiving hair oil and it will be debited, and you are giving money to them, so cash will be credited. Yes.
Yes, sir.
So the techniques we use to pass journal entry, first of all, you need to understand how we will pass journal entry. Actually, this is the format of journal entry. There is 5 column. First is for date of transaction, you will write here. Then particular means you will write the details of transaction here. Then ledger folio and debit amount and credit amount. So there is total 5 column here. Okay.
Yes, sir.
Okay. Now the debit and credit will be written here. Okay, so I told you that you have purchased here. Let's say you purchase stationery. You purchase some register, the notebook. Yes.
Yeah.
And you paid cash for it. So stationery you are receiving. So stationery account will be debited. So it will be written like this: stationery account debit. And the credit item will be written like this: to cash account. You don't have to write credit. To means it is credited. Okay.
Okay, sir.
And the amount will be written here. So we will understand how to pass journal entry. I will show you by solving one question for this. So you will understand it. So I'm just giving you a brief so that you understand what is debit, what is credit. So item will be debited if it goes with the rules, and it will be credited if as per real account it is going out. Okay. So by real account rules, in any transaction, if you are doing any transaction, then some items are received and some items are paid. Okay, so item which is received will be debited, because debit what comes in. Okay, so whatever you receive will be debited and whatever you give is credited. Is this clear?
1 minute, sir. Okay, sir.
Okay, so is this clear to you, real account? Okay, the second is personal account. Means the account in which name of the person or organization comes or included. Yes.
Yes, sir.
So if we are talking about any person, then we will say in every transaction, a person can be receiver or giver. Means either he is receiving something or he is giving something. Yes.
Yes, sir.
Okay. So if we are doing a transaction with someone, let's say I am purchasing a good from A. Okay. So I will write like this: purchased. The color should be okay. So purchased goods from A. Now, if this purchase is made on cash basis, then we receive goods and paid cash. Okay.
Okay.
So we need to remember the name of A. Yes or no?
No.
No, because we paid in cash. So A will not remember our name, or A will not record our name. And also we will not record A's name. Yes.
Yes, sir.
So in personal account, whenever there is a credit type transaction, then we record the name of the person. Okay. So if there is only one side transaction, then we record the name. Like we purchase the goods on credit basis. Now, if we are purchasing goods on credit basis, in return, we are not paying something, but we are receiving goods from that person. Yes.
Yes, sir.
Yes. So can you tell me, A is receiver or giver here?
A is giver.
Giver. Okay. So A will be debited or credited?
A will be credited.
Credited. Okay. And who is the receiver here?
Us.
Us. So we will not record our name. It's simple. Okay.
No, sir.
So instead recording our name, we will think about other things that should be debited.
Okay.
And here. Just Hello. Okay. She's joined and again exited. Okay, so we purchased a goods from A and didn't pay the amount. Okay, so A will be credited here due to this rule, credit the giver. But what item will be debited in this transaction? Okay, we don't record our name because we are the business owner, so we don't record our name. Okay, so we are receiver, but we will not record our name. So what will be debited here? Because we purchased goods. Okay, so goods is coming into our business. Yes.
Yes, sir.
So goods is a real account. And if it comes in, then it will be debited. Yes. And A is giver here. And it is personal account, so it will be credited. So we can write journal entry like this: goods account debit to A account. Okay.
Okay, sir.
So in every transaction, you have to understand that which accounts are affected by this transaction. Okay. And when we understand, when we will determine the account's name, then we will see that in which category they belong: a real account, personal account, or nominal account. Okay, in any of these three category they can belong. Apart from these, there is no category, so they cannot go in any other category. So either they are real account, personal account, or nominal account. Okay, so they belong to a category here. So after finding the affected account, we will see the nature of the account, that is real, personal, or nominal. And we will apply these rules on every transaction, and then we will debit or credit the items. Okay?
Yes, sir.
Okay. Now, let's say we have taken money from someone. We have taken money from A. What will be the affected account?
We took money from A.
A.
The affected account.
Yes.
Debit.
No, debit and credit is side. Okay.
Okay.
It is like left and right. Okay.
Debit.
So which accounts?
Debtor.
What?
Debtor.
Debtors.
Debtors. Oh, debtors account to cash account. No. Debtors account to A account.
And what is debtor means?
People who borrow money from us or borrow money.
Borrow money from us.
No, not from us, from anyone.
Anybody? Then they are not debtor for us.
Yeah, not debtors for us. We are debtors.
Okay. So we have to write only those names who are who belongs to us. Okay, so in this situation, they are actually, we are taking loan from A, we are receiving money from A. Okay. So in this case, A is not our debtor. Debtor means a person we have sold our goods to.
Sold our goods?
Yes, if we sell our goods to someone on credit basis, then that person has to pay us money now or in future. Yes or no?
Yes, sir.
If he pay us now, then the account is settled. There is no dues. So no problem. But if he decide to pay us in future, then he is a debtor for us.
Yes, sir.
Okay. So this is our personal account. Okay. Purchase goods from A or received money from A. Okay. The last one is debit all expenses and losses, credit all income and gains. Now, I told you that in nominal account, we include expenses, losses, income, and gains. Okay. So any expenses that is given in transaction will be debited. Any expenses means if we have paid wages, then wages will be debited. If we had paid salary, then salary will be debited. If we have paid rent, then rent will be debited. So all the expenses or losses will be debited in our books, and all the income and expenses will be credited in our income and expenses, not income and gains, will be credited in our books. So rent received, discount received is generally credited here. Okay.
Okay.
Okay, so these are the rules you have to remember. Okay, so first of all, you have to see any transaction. Like let us see. I will explain the transaction. This is the process I'm talking about. First of all, you have to identify the accounts in the given transaction. So any transaction will be given in the quotient. You have to find out the accounts that is involved, that is affected by that transaction. Okay, so the first point is this: identify the transaction. Now, the second point is ascertain the nature of account, that is personal, real, nominal. So if let's say the account affected is furniture, then which category furniture included?
Furniture, real.
Real. So you have to find out the nature of account also. After finding out the account, then nature of account. Same if we purchase good furniture from, let's say, from furniture from X. The name is X. So if we purchase our furniture from X, then that X is also affected by this transaction, yes or no?
Yes, sir.
So S is personal.
Yes, sir. Personal.
Yes. So you have to find out the nature of the account. If there is a rent in the transaction, then it is nominal account. So the second step is ascertain the nature of the accounts, either real, personal, or after that, after finding out the nature of account, we will apply the rules as per their nature. So if it is a real account, then we will apply debit what comes in, credit what goes out. If this is personal account, then we will apply debit the receiver, credit the giver. And if it is nominal account, then we will apply debit all expenses and losses, credit all income and gains. So by finding the nature of account, then we apply the rules of debit and credit. And according to that rules of debit credit, okay, we are using, we will pass journal entry. So items which should be debited will be debited in journal entry, and other items will be credited. Is this clear?
Yes, sir.
Okay. Now we will discuss few transactions here. Let's leave the first transaction. We'll discuss the first transaction later. But the second transaction, purchased goods for cash. Okay.
Okay.
So you can see here, the process is written. First of all, we will find out the affected accounts. So if we purchase goods for cash, means we are getting goods and we are paying cash. So there is two accounts affected, goods and cash. Yes or no?
Yes, sir.
And both of these are real account. Goods are also real account and cash is also real account. Okay. So if they are a real account, then we have to apply the rule of real account, means debit what comes in, credit what goes out. Now, can you tell me, if you purchase goods from for cash, if you purchase goods for cash, then which account should be debited and which account should be credited?
If I purchase goods from cash.
Yes, purchase goods for cash.
Purchased goods for cash. Goods account. Goods account. Goods account debtor to cash.
Goods account debit to cash.
Cash.
Okay. So goods we are receiving and cash is going. Yes.
Goods we are yes, sir.
Cash is going and goods we are receiving. So we will debit the goods, okay, and we will credit the cash.
Yes, sir.
Okay. So you can see cash account, real account. So we'll apply the rule of real account, and by that rule, cash is going out, goes out. Then it is credited. And goods is also real account, and by the rule of real account, it is comes in, then it will be debited. Okay.
Okay, sir.
Okay. Now, what are the accounts that is affected in paid salary?
What are the accounts paid salary? Okay.
Affected. Accounts affected by the transaction, paid salary.
Pay cash, paid salary account to cash account. Salary account to cash account.
Salary account debit to cash account. Because
yes.
salary is expenses for our business, and by the rule of nominal account, salary should be debited. Yes.
Yes, sir. Yes.
And cash will be credited because we are paying cash for the salary purpose.
Yes.
Okay, so cash is going out. That's why cash will be credited, and salary is expenses. That's why it will be debited. Is this clear?
Yes, sir.
So there are many types of transaction you will get, but you have to follow these rules and solve the question. Is that clear?
Yes, sir. Clear.
Okay, just 1 minute. Okay, so a real account, personal account, and nominal account. So we understand the concept of real, personal, nominal. Now there is this transaction. The first one, you can see the business started with cash. Yes.
Yes, sir.
Okay. So if business started with cash, so the first account that is affected is cash.
Yes, sir.
First account affected is cash, and the second account affected is owner's.
Yeah, capital is owner's account.
Yes. The second account affected here is owner account.
Okay.
Now you want to understand how owner account is affected.
Yes.
Yes. So who is giving money?
The owner.
Owner. So the owner is paying money to the company, to the business. So cash is affected in the business at one hand, and the other is owner. Yes.
Yes, sir.
Okay. So cash is real account. Cash
Hmm.
is real account, and owner is giving to the business. So we are accountant of business, not owner. Okay, we are accountant of business. So cash is coming into business. That's why cash will be debited. Yes or no?
Yes, sir.
Yes. And owner is giving cash. So owner is giver. Owner is
Yeah.
giver. So owner is personal account and it is giver. So it should be credited. But I told you that owner name cannot be written into the business. Yes.
Yes, sir.
So that's why I have written capital here, because we cannot use owner's name in the business.
Yes, sir.
Okay. So whenever a person invests money into his business, it is called capital. We don't use his name. And if he withdraw money from the business for personal use, then we will use a word drawing, not his name. Okay.
Yes, sir.
Okay. So this is our transactions. First is business started with cash. So the journal entry will be cash account debit to capital account. Okay. Good. Now the second is purchased goods for cash. Now, if you want to understand, there is a second method for this also. But first, understand this method. So purchased goods for cash. If you are purchasing goods for cash, then there is only two accounts affected: cash and goods. Cash is real account, goods is also real account.
Yes, sir.
So we will apply the rule of a real account only, means debit what comes in, credit what goes out. So cash is going out and goods is coming in. So goods will be debited and cash will be credited. Is this clear?
Yes, sir. Yeah.
Okay. There is a second method also in which purchase goods, purchased goods is expenses for the business. Yes or no?
Yes, sir.
And expenses is included in which account?
Expenses is included in debit account.
In debit account?
Yes, sir. Debit account. All expenses and losses are in the debit account.
No, I'm not asking for side. Okay, debit is a side. Debit is not account.
Oh, okay.
So which account?
Which account?
I'm saying the nature of the account.
Wait, sir. Goods account, debtor to cash account.
The nature of expenses is nominal account.
Okay, like that.
Yes, like that.
Oh, yes, sir.
Okay. So as per rule of nominal account, all the expenses should be debited. So your answer was correct, but I'm not asking about the debit or credit side. I'm just asking for the nature of account, the type of account it should be included. So purchased goods is expenses for the business and expenses is nominal account and it should be debited. Yes. So we
Yes,
can
sir.
write here like this. Cash is same. Cash entry will be same, but goods account will change. So we will write purchased goods. Purchased goods. It is nominal account. And by nominal account rule, this is expenses. Purchased goods is expenses, so it should be debited. So the journal entry will be purchase account debit to cash account.
Purchase account. Okay.
Purchase account debit to cash account, because cash is going out, so it will be credited, and purchase is expenses for the business, so it will be debited. Okay.
Yes, sir.
Any confusion?
No, sir.
Okay. In the same manner, actually, the goods, you can see, goods is generally not written in our books. Now, you can ask question why?
Why?
Yes. So, if you purchase goods, means you are buying goods, and if you are selling goods, in both of the cases, you will write in a single account, goods account. Yes or no?
Yes, sir.
Because if you are purchasing, then you will include goods. If you are selling, then you will include goods. Yes.
Yes, sir.
So you will not be able to find out that how much purchase we have done in a year and how much sale we have done in a year, because purchase and sale both will be mixed. Yes or no?
Yes, sir.
So the total balance of purchase or sale cannot be included if goods will be written in the journal entry. So that's why instead of goods, we write purchase. Okay.
Okay, sir.
So you can pass the second entry with any of these two methods. Okay. You will think from the perspective of goods account, or you can think the perspective of purchased goods, which is a nominal account. Okay.
Oh, okay, sir.
Okay. The next is purchased goods on credit. Now, which accounts are affected here? So first is goods. You can see goods account is a real account, and if we have purchased goods, then it is coming. Okay, so it will be debited. And the second item is creditor. Creditor means who is giving us goods on credit basis.
Yes, sir.
Okay, so creditor. Now creditor will be a person. So there will be a name attached to him. Yes.
Yes, sir.
So creditor can be A, B, C, X, Y, Z, or any name. Okay. So that is a personal account, and with the rule of personal account, we have to find out that he is a receiver or giver. So if we are purchasing goods on credit basis, then he is giver only, because he is giving us goods, and in return he is not receiving anything right now. But in future he will receive, but he is not receiving anything right now. That's why he is a giver right now. And giver name will be creditor, credited. So you can see creditors, personal account, giver, credit. Okay, is this clear?
Yes, sir.
So the journal entry will be purchased goods on credit. So purchase account debit to creditors account. Is this clear?
Yes, sir.
Now, the last two transactions, sold goods on credit and sold goods for cash. If we sell goods for cash, then cash will be received and goods will be going out. So goods will be credited and cash will be debited. But this is a sale transaction. So instead of goods, we will write sales. Okay. In purchase transaction, instead of goods, we write purchases. Is that clear?
Oh, yes, sir.
Okay, so sold goods on credit. So instead of goods, we will use sales account. So you can see that if we purchase goods on, sold goods on credit, then goods account is a real account and it is going out. So it should be credited here. And if we are debtor account, yes, if we sold goods on credit, then we are giving that good to some person. Yes, and that person will have a name. Okay, so debtors account is a personal account and he is receiver for these items. That's why his name will be debited. Okay, is this clear?
Yes,
So
sir.
we'll
Yes.
understand many more transaction, so that you have a basic concept of these three rules. Now, in next class, actually in previous class, I have given you some homework. Yes,
Yes, yes, sir. Single entry and difference between single entry and double entry.
yes. Have you tried?
I've sent you the picture, sir.
Or you didn't write the answer?
Yeah, I wrote the answers. I did.
Okay. So if you wrote the answer, you should send on WhatsApp or chat in this meeting.
No,
Okay.
sir, I sent it you, sir.
You send me?
Yes, sir, I sent it.
Okay.
PDF.
Okay, actually, I don't see my phone right now. Okay, I don't have it right now. It is on charging, so I will say it. Okay, so we'll discuss your homework in the beginning of the class. Actually, I forgot to mention the homework in the beginning, so we will discuss it in our next class. Okay,
No, sir, we discussed it already.
all
We already discussed it, sir.
single entry and double entry difference.
Yes, sir.
No, I will discuss that you have written the correct answer or not, like that.
That too we discussed.
Okay, okay, then fine. I will be giving you a homework in this class, and then we will discuss this class homework in our next class.
Okay, sir.
Okay, so the first of all, your homework. Okay, I will send you some journal entry, and you try to solve those journal entries. Okay,
Okay, sir.
so